Everybody, this is Jim at SP500chart.com. It's a little bit before 2 o'clock on Sunday afternoon, February 26, 2017. We're going to take a look at the S&P 500 chart. After I remind you that the website and the video are for educational purposes only, nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Here is a 15-minute chart. And really this chart, I think, is going to show us most of what we need to look at. That is, as you know, well, you may not know. If you're not a subscriber to SP500chart.com, you might not know some of the things I'm going to be talking about. And I apologize if that's the case. And just to remind you, there's something you can do about it. You can go to SP500chart.com and sign up to get the weekly videos. Excuse me, the weekly videos, you get those. I mean the daily videos. So, in other words, we do a video Monday, Tuesday, Wednesday, and Thursday. This particular week, I could not do the video on Wednesday due to my work schedule being gone for like 18 hours away from a computer. That's a rarity. So anyway, here's the deal. We knew we were in this very narrow, steeply rising channel. We also knew that this channel started to show weakness late the week before last, and all of the trading on Friday took place underneath this line of support. But on Monday, we got back over this support line, but then just started to go sideways. And remember, when a channel breaks, especially a steep channel, when a channel that is rising sees its lower support line break, that's happening for one of only two reasons. It's either happening because the market has reached a top of some type, short term, intermediate, long term, doesn't matter, some kind of top, and it's going to form a reversal pattern. The second thing that can happen is the channel is rising too fast and it's time to take a breather. In other words, it simply cannot be sustained. So you reach a point where bulls and bears are essentially equally matched and you go sideways. Folks, in a nutshell, this past week, which was a short week due to the President's Day holiday, there it is right there. There's your week. These 4 days all trading between a low of about 23.53 and a high of 23.67. So we traded all week long in less than a 1% range, all underneath this rising support line, and for the most part, with the exception of that little opening strength we saw on Thursday, it looks like we have resistance here at about 23.67. We talked about that resistance starting on Thursday, and and wouldn't you know it? Would you look at that? Where did we close? We closed on that line of resistance almost exactly. So I just think that's kind of interesting when we see stuff like that happen. Additionally, I mean, if you want to throw another line up there to make the chart look pretty, it's sort of interesting to note that we have a number of little points of support that over the last 3.5 days or so have seemed to kick in, but this is really the thing right here. And I don't know whether this actually comes into real play or whether that's just something that's just a little bit out of bounds. Hard to say. But I think I can say that that this level up here at 2366, 2367 is actually closer. That is, I think, an important level. And getting over that should signal I think, should signal a pretty good rally. Remember, the thing that we're looking at in the long haul here is getting up to our 2468. Let's just call it mid to high 2460s inverted head and shoulders pattern target. Funny, you know, back in October, November, we're looking at this going, oh man, is this pattern going to fail? Because typically you don't get underneath a neckline, and here we were in early November underneath the neckline. But look what happened. We got down there, and then, boom, we are up nicely over the past 4 months, 3-point-something months. Really a strong move. The other thing that I mentioned, just for the heck of it, a lot of times you enter a period of consolidation about halfway along a move, and I think that consolidation that we see right here in the form of this diamond pattern may very well be that halfway point between where we came from in November and where we likely will end up in the 2460s to as high as 2470 as a minimum, where it appears we are going to be headed now. So the week was pretty simple. It was a week of consolidation after we saw some weakness enter this lower support line. It broke down. Gave us a little bit of a precursor of that on Friday, tried to get back up in it, but then, nope, we got to go sideways. So this, because we have this flat top up here, it's funny, you hear some fairly well-known chart readers say flat tops produce market drops. And I can't really argue with that, but I want to add one thing to that statement. Flat tops produce market drops, but they also, when they're broken out over, produce rallies. So here we've identified the flat top, and there you could see that 1, 2, 3 times we couldn't get over it. But I believe in this particular case, this line is also going to be diagnostic. And what I mean by that is that getting over this line will help us diagnose the health of the market. And I think that 2460, 2470 target, I really think now that we are about 100 points away from that, we're about roughly 4%, 4 and a fraction percent away from that target that was called, when did we call that target? Well, you want to know when it was? It was back in July of last year. And I think we said that it could take a little while to get there. And I really was a little surprised that we got over this green line here. And finally, the one thing I want to say is this. Getting over this line is not, I do not view that as a good thing. I view that as a potential negative. I think our target still gets hit. But getting over this rising line of resistance shows that we may be just a little bit overheated here. We haven't had much of a pullback in quite a while. So if we get up to our target level up here, I suspect we will likely see a fairly sharp pullback if and when we hit that target. So guys, there is your weekly review for the week that ended February 24th. I want to thank you for taking time out of your day to watch this. Again, to make it just sweet and simple, the week was one of consolidation. The question is now, watch this line of resistance getting over this, and we should run up and I would think could very easily start to put pressure on 2400. I'm sort of ignoring the fact that we're over this line of resistance, or what used to be a line of rising resistance. Again, that is a negative as I see it, but we still have the overriding target up there, 2460, 2470. So it just looks like this market is just intent upon reaching that target. So guys, I want to thank you for taking time out of your day to watch the video. I want to remind you, if you want to see daily videos like this, you need to go to sp500chart.com and sign up. It's not expensive, $24.95 for a month, per month, and you get a 2-week trial for a handful of dollars. So come try it out for 2 weeks. If you like it, stick with it. If you don't, you don't need to. But clearly, what we have been doing over the last 6 years or so, or more. When did I start doing this? 2010. It's so far the chart has worked beautifully for us. So let's see if it continues to do so. So thanks for watching, and as always, thanks for your very, very kind support. Take care.